The unemployment rate in South Africa increasing to 25.2% in the first quarter of this year. That's from 24.9% in the fourth quarter of last year. To discuss this figure and also some other economic data out this week, we've got Annabelle Bishop, Chief Economist at Investec, joining me at the desk. Thank you so much. So certainly a somber mood to look at the jobs data on the show today, because we haven't made any inroads in improving the high unemployment rate in South Africa. I mean, just break down those numbers for us.
Well, you have the unemployment rate sitting at 25.2%, and I think that's very worrying. You know, unemployment in South Africa is sitting at 4.6 million individuals, and this is formal sector unemployment, and that's actually up from 4.2 million individuals in 2008. Now, if you recall, 2008 was the end of the boom. So we've actually seen higher unemployment rates than we had at the end of the boom. Clearly in the recession we lost a lot of jobs, but I think the reality of the situation is for South Africa is that we were yet to actually make any significant strides into the overall double-digit unemployment rate, which clearly needs to be brought down into low single digits to bring us more in line with international norms.
Because I mean, a few percentage points up, a few percentage points down, we're still around a quarter of our population unemployed, and that of course are those who are willing and able to find jobs. When it comes to kind of the problems in South Africa right now, I mean, where would you say, is it education that you bring this down to? I mean, when you're looking at this unemployment situation from an economics perspective, how would you be approaching this?
I think the biggest problem is the rigidities and the excessively over-regulated labour market in South Africa that prevents individuals from easily acquiring work. And I think the biggest problem we actually have in South Africa is that it's extremely difficult for companies to take on staff and let them go when they need to when the economic cycle comes off. And the reality of the world is that you're going to have up cycles and down cycles. So if you're unable to shed workers in a down cycle, companies are very hesitant to take on workers in an up cycle. But without taking on those workers in an up cycle, you deny a large body of individuals in South Africa a work experience, and therefore they don't become as employable as they could become. So I think that's one concern. The lack of a youth wage subsidy as well, encouraging companies to take on youth, is also problematic. But I think one of the biggest issues companies really are finding now is a high degree of strike action that's coming through, and that's a disincentive for companies, and some of them are actually looking to moving away from producing to perhaps into training, other areas where they don't have to deal with so many significant labour issues.
Now you've got these graphs up on the screen, and what they're showing you is that we haven't made any inroads into making, getting back the jobs that were lost over the recession, and we still were sitting at high unemployment levels, as you were saying, before 2008, and we've been sitting at these kind of 25%, a quarter of our population unemployed for almost a decade now, maybe even more than that. So when it comes to the labour market in South Africa, do you see that as likely changing? I mean, do you see that the government being able to bend, given the fact that they know that this really is one of the key factors that economists are saying is holding back the market?
I think the problem government has, the problem the ANC has, that is in a tripartite alliance with the unions and with the South African Communist Party. So we've had unions governing South Africa since 1994 in the tripartite alliance, and I think the big problem with that is that clearly you're going to have a lot of rigidities in the labour market. We're actually ranked worst in the world in terms of our labour-employee relations, the employer relations with their labour force. And obviously the great concern is that was before the incidents we had last year with Marikana, the Marikana tragedy. So we can't be ranked worse in the world than we are, and yet this persists. These rigidities and problems in the labour market persist, and with new labour laws proposed that are just going to make it even more regulated, even more difficult for companies to do business in South Africa, the situation can't really improve.
Yeah. Talking about various sectors of the economy, let's focus in on manufacturing. We've got manufacturing data coming out on Thursday, a big day today overall, but manufacturing data for March, do you see that contraction continuing into April?
Interestingly, in March we had Easter this year, if you recall, and last year it was in April. It was a split Easter. We had one day of public holiday in March and the rest fell in April. So I think the concerns clearly are that, are we going to see another base effect come through? And we think we're probably looking for manufacturing growth maybe of around 1.5%, 1.7%. So, a bit of an improvement. I think we may see some revision to the February figure, but really, as you know, there is a slow start to the year as companies get up and running. And I think we probably will see some moderation, perhaps in some moderate growth, not a moderation, a moderate growth rate in the month of March, but really I think some improvement as we move into April. So there have been a lot of factors besetting the manufacturing industry, and of course, again, strike action doesn't help.
I mean, strike action, labour demands, wage demands, electricity prices, the list goes on when you're talking about cost push pressures. When it comes to the rand, do you see that as having any offsetting factor in the manufacturing base right now in terms of being able to sell products that are slightly more competitive?
Well, I think, we'll certainly see that when the figures come out. One of the problems with a weak rand is that it significantly increases the cost of raw materials. I mean, bear in mind that a lot of commodities are dollar-based. So I think a lot of people forget that in their requests eternally for currency weakness. But when you actually have substantial rand weakness that we've had, it actually pushes up the cost of doing business. And if your raw material costs go up simultaneously while your wages go up because of strike action and rest that we're seeing in the sector, then, your net result really is not one where you come out ahead in terms of competitiveness. I think these are some of the worries that are really manifesting in the manufacturing sector in South Africa.
And of course, we've also got mining data coming out for the month of March, and we saw a nice uptick, a healthy uptick. I don't know if it's a healthy uptick, but an uptick nonetheless, 7% year-on-year growth in the volumes there. Do you think that do you think that we can sustain that here? I mean, what are your forecasts looking at right now?
Well, we've had some negative I suppose, moves in the commodity prices globally. But really, I think, again, it's going to come down to production. Are we able to keep up our production levels? Or are we going to get load shedding? And is the industry going to have to cut back? Because Eskom has already signalled that load shedding is quite likely in winter. And of course, in terms of strikes, again, are these going to be persistent and disrupt the industry? Or can we actually manage to pull South Africa forwards? By actually getting a handle on our labour concerns. I think, these are going to be the most telling factors for our mining industry.
Thank you very much for joining us today. It doesn't really seem like the picture has changed much.
No.
Has it got better or worse from the beginning of the year?
I think what is the great concern is that I think many strikers have come to the realization that violent and prolonged strike action has resulted in significantly higher wages, and they've certainly been rewarded with double the minimum wages in the agricultural sector. So for me, that's a concern, and for me, that's a carryover from last year, which certainly has some negative implications.